Martin from Secrets, the channel for learning about trading and investing. Welcome to quick daily stock market analysis, where we look at the charts and then try to understand what happened in the market during the day and then plan for a better trade for the upcoming day. That's February 27th, Tuesday, 2024. So the markets looks like it needs more time. Banks still not doing the party as expected, and it was a down day with 0.5% fall on the indices nearly. So we have the details here. Less than 0.5% actually on the Nifty, and it was 0.5% of the Banknifty. So banks are not supportive as expected, and that's a summary. You can take a screenshot of this if you want, but we would look at the charts to begin with. Right, so here we go. So that's the plain candlestick. So it's a spinning top, but since it's not the very top exactly, it may not be that relevant. But regardless, if you consider it is at the top itself, then it's dangerous, but only if it is confirmed after the low of the spinning top is breached. It's basically bearish. Small bodies are indecisive, and this is neither a doji nor a hammer or anything. It's middle part, middle body of the candle, relatively small, and overall candle size also small, and it shows indecisiveness basically, and it can be dangerous if it is at the very top of an ongoing rally. So today this is not an ongoing rally, it was already a retracement, so we may not need to worry much about it. But regardless, there is some indecisiveness, and there is a gap down. Gap downs are almost not that great. It indicates this pressure of the selling. Banknifty has fallen back on the neckline of that breakout zone, the W pattern as we're talking about. It's exactly there it had stopped, and it formed a red hammer, inverted hammer actually, not hammer. So the inverted hammer in a trend could indicate a reversal from there. So if you consider the downfall as a trend, it could indicate a support being taken here as a change in polarity, and a bounce up from here could happen. Right. So that's Nifty and the Banknifty candlesticks explained. But the W pattern is still intact. The breach of the W has not fallen back to make another bottom. As long as that is not happened, it should be fine. And here also the W has already got triggered, and it has come back to its support zone from where it broke out. It could take a support here, and a change of polarity bounce up move can happen. The previous resistances from where a breakout happens, if it acts as a support, and then there is a possibility that a change in polarity concept happens in the technical analysis, and a bounce up from here is possible. And it's not confirmed. It confirmed if either of the low of the high is breached. So change in polarity bounce up from the support zone is possible, and markets looks like it takes its own sweet time to move up. But one thing is clear, that it is a lot of banks will do a lot of up move before it catches up with the previous all-time high, while Nifty is already heated up and it's almost at the all-time high itself, having done too much. It's very less retracement. That's the only reason we have to be careful. And Nifty is well within a trending channel. It had hit the all-time high at near to 22,300 only yesterday, only the previous trading day. So I don't know what is going to happen. But if this level is breached and further falls down, and then does not find the support at the 20 expression moving average at 21,932 that levels, and then it would mean another fall down to the bottom. But as of now, it's making another higher low, right, after having made the higher high, is what we'll have to assume. Right. Well within the trend line channel with a lot of supports at 2050, all this expansion moving separates it there. Banknifty similarly had conquered the 20 expression moving average, climbed to the blue channel from where it had fallen multiple times, and still is at a support zone above the yellow channel from where it had climbed to the blue channel. So yeah, we already talked about the possibility of a change in polarity. It is also comfortably above 20 exponential moving average in the 50 and the 100 and all that supports down there. As long as that is not breached, you don't worry. It is just a small pullback. See the lower low lower high pattern that Banknifty was having was negated when the swing low was created at 47,400. So now the possibility is to create a low and then take a bit of energy to break out from that to hit the 48,000. So let's look at the support resistance levels for Nifty to begin with. So the first resistance above, of course, the 22,300, then the 22,500 and 600 above. It's top of the channel basically. Uncharted territories. Downside, the first support coming at 21,932, the exponential moving average of 20, then 21,570, the 50 exponential moving average, and then 21 retracement at 23.6 retracement at 21,350, and then the swing low at 21,150. 21,000 rounding number and 20,950 is our gap support. So this supports on Nifty. Banknifty, resistance upside would be to take out that 47,400 first, and then 48,000 gap resistance, and then 48,636 all-time high. So the first support would be the yellow channel top, that's at 46,400 nearby zones. That is breached, then very close by at 46,330 you have the 20 exponential moving average, and 100 points down 46,230 you have the 50 exponential, and it is more down at 45,800 you have the 100 exponential moving average supports. That's all breached. Then you have a Fibonacci 50% at 45,350, and then we have the 44,820 which is 200 exponential moving average support in there. Very close by you have the 44,600 which is the 61 point retracement, and also another 50 points down, 100 points down you have the previous swing lows also at 44,400. So that's the max it can go down. Anything from there is going to be not correction, it may be crash, right? So as long as this 20, 50 and all that is supports that they're not breached, it doesn't go to make another swing low, then we're good. As of today, we're not bad at all, because it's a zone where the bounce up can happen from here. So support resistances are studied. Now let's go back and then wrap it up. So here we have 0.32 percentage. Oh, it's not 0.32, 0.41 percentage of negative book close bearish candle. Formed 91 points negative close, but still the 22,000 and the 20,400 is intact. It was a gap down day. Remember, we had 32% of rally with just 4.5 correction. 20 exponential moving average is intact. Banks, on the other hand, also gap down with an inverted hammer and close negative with little more extra cut, 0.5% cut, exactly 235 points gone. And still in the attempt to recover the deeper correction of 88.5%, and could not manage to close about the 47,000 or anywhere nearby. Right, just closed really close. It closed at 45,600 nearby, so 576, right? So it just slipped a little far away from the 47,000. So that's a weakness. That's a problem. Intraday it was very volatile. It was a gap down, and then it remained range bound in 100-300 points in the indices, right? So what happened? So volatile downtrending day, and finally ending up below range bound moves of 100. So far data has come on, institutional data showing that it was selling from both institutional FIs and DIs. DIs did not come in for buying. That's why it did not make another all-time high. Otherwise, it would have been an all-time high. So after a long time, DIs have neither sold too much nor come into risk with a buy. And so market lost the 0.5% because of the FIs selling or retail panic. Fear of heights, what I call. The resistance support levels, I'm not repeating, is already there. But the thing is, today the momentum of the Nifty had gained is gone. In the sense, it's lost some of the momentum and slipped here sideways. in the Nifty, and Nifty already was sideways and it's falling. So that trend also is crossed over in the case of Nifty this time. Banknifty, the trend is not at crossed over. That's a contradiction. So trend-wise, Banknifty seems to be a safe place, better place, considering that it has a lot of way up to go. But trend strength-wise, it is not crossed over, but Banknifty is crossed over. So back to sideways. With respect to 4%, market also fall down. But 15.6, it's above 15, so gotta be careful. It's medium high volatility regime. Bollinger Bands is still in the expansion mode, even though there is some kind of consolidation, bearish moves that has happened. The bands are still pointing upwards. That means Bollinger Bands are indicating that there is more up moves that can come in both indices. Nifty also, look at this. Bollinger Bands are expanding on the upside, even when the market prices retraced last 2 days. So Bollinger Bands indicating that, and so technically the momentum and the trend is what has got impacted. Right, both indices, and the bank is not ready to join. It's not eager to climb another 5,000 point immediately. But the point is it's a CIP point. So whatever, if that happens, good. Otherwise, we may see more cut or more another retracement. We are at 2.5% retracement. Earlier, we had a 4.5% retracement in Nifty before that. And now we have 2% nearby retracement, 1% retracement. So let's see how it goes. So the major market industrial, sectoral indices are all close to red today, except for the auto and the reality. They managed to be flattish green. With auto, pharma, reality, the three sectors in the indices are showing that it's still in the short-term momentum bullishness at RSI above 60. While the metal, FMCG and IT is sideways, and we have none of them the bear zones at sectoral indices. Right? FMCG actually had fallen down in the bear zones but climbed back, and now they're on sideways. So all good on the sectoral indices. No big deal. There are some stocks that's getting rotated and then leading and remaining bullish, while others are catching up in the sideways. Now the heavyweight stocks that contribute maximum, we have all red today except for the HDFC Bank, surprisingly moved little up but flattish green. Lions and the ICICI Bank are the two stocks in the heavyweight stocks that maintained bullish, only two of them. Three of them, HDFC, TCS and Infi. The IT stocks in the HDFC Bank have climbed and maintained the sideways momentum. But we have Kodak and ITC. ITC once again slipped in the bear zones today. So we have two of them in this bear zone, three of them in the sideways zones, and two of them leading bullish momentum. So that's how the sell-off, and that's how the momentum picture in the short term is there in the heavyweight stocks that contribute maximum to indices. US indices, the Dow Jones, S&P 500 and Nasdaq, they've all been a big rally, and they're all green on a week-to-week basis, but in the last trading day there was some red that's seen there. So be slightly careful and watchful about what is the index going to, when is the index going to retrace, and that will be the time when similar retracement will come in our index as well, probably, because it's a mother market. The dollar is flatly traded at 103.7, and the rupee is clinging a little bit, but 82.8 is still remaining weak at the top of the wedge, being controlled by the central bank. Crude oil is red at 76. It's down within the trend line channel, and it's no major worries as of now. Gold is flattish, remaining at the top, ready to break out any time, but consolidating at the top, while crude is consolidating at the bottom. Dollar is falling slightly, and rupees gaining chiller slightly. US indices at the very top, no big indications of corrections is coming in, although it's red as of last trading day. All good, no negative cues as of now. So as I always say, investors would have to find opportunities to buy long-term quality stocks in the SIP mode whenever there is a dip or corrections like today comes in at small SIP mode consistently. For trading, the direction is not clear yet. Looks like we have all-time highs every day in the previous week, and it may look bullish, but Banknifty has not joined in, so corrections could come in. One index alone cannot consistently move always up, so we need to wait for both indices and both time frames to be in the bullish mode before we can go directional option buying or something like that. Otherwise, you have to play with your range. Don't worry if Nifty expanding up interest levels are very wide, because option speculators does not have any idea whether the market may be moving up or down. It's a 1,000 point, 21,000 on the call side and 20,000 on the put side. It's bearish put call ratio 0.70. So that's where the market is. So play it safe and be careful, because VIX is spiking up. Market is all-time high. Banknifty has to catch up. So play it safe is all I say. Manage your position size, cut short if it is for the spiking VIX, and hedge your positions always if you're carrying forward. Never take naked options, trading, buying or selling, whatever. Right? Thanks. If you're not subscribed, please subscribe and share different simple weeks. If that reaches out the max. Thanks for watching. Happy trading, happy learning, happy investing.